Hey, what's going on, guys? It's your boy MC Fire. We are coming at you again with another in the market recap. We're going to be taking a look. This is January the 15th, and we want to definitely take a peek at the markets and look at the certain financial data that's coming out, and unemployment claims are coming up tomorrow, as well as some potential plays. So let's dive right in. All right, so we're here on the charts. Off rip, we want to talk about one play that we see developing pretty nicely. And as you guys know, I put out a post yesterday that we wouldn't be doing any trading as of yesterday, but today we are full swing. So what you see here currently is you've got XLF as a moving average cloud, double green is green there, and you got a setup candle sitting pretty right here. You also have these two candles as well that are setting up to the downside. There was some follow through, but there's significant build up of orders kind of in this area. So if you think about this gap and then orders kind of build in this area, we're hopefully looking to see it be above there and fire back off to the upside. Now, something interesting in my analysis last night, I was looking over the charts a little bit because for some reason, really just love looking over the charts. You can see it's already kind of pushed significantly above this major resistance level at 48.70. So I would definitely this is a learning moment for a lot of you guys. Is we saw the alert go off yesterday, but due to religious observance, we did not take any trades yesterday, nor did we make a video. But to a point, right? This is what can happen with the system. And when it works in tandem with the overall ETF, real magic can happen. As you can see, you've got a couple alerts on that haven't triggered because the market hasn't actually opened yet. But there is alert on most or a few of the XLF major players in the XLF as it stands right now. The charts kind of look very similar. You get a nice bottom left, top right pattern overall, double greens overall, meaning momentum and trend is in the up direction. And then what I want to bring to the front of the classroom is stuff like Bank of America, BlackRock. You also have Morgan Stanley, Wells Fargo, and even Goldman Sachs. These few, right? These stocks that are in the top pickings of the XLF primarily all have the same and very similar setups. They all have setup candles in those areas. So we're going to take a look at that as the case study because I want to bring you to the front of the classroom. When you have this huge swell of setups in kind of in the same general sense, and then they all work, this can be like a major catalyst. You're not going to get this kind of stuff anywhere else, guys. You're not going to get this kind of edge anywhere else. You can already see kind of the follow through from yesterday. So let's say you bought a call, you'd be already doing pretty good as of this morning. Let's go take a look at all these and see what I'm seeing. Okay, so you see Bank of America. We're going to do the IOU system, identify the trend, double green here, right? Outstanding candle, there it is. And then you take the setup, IOU, there it is. Cracked above here, it's already above there. So the potential for it to push the highs is extremely high. But there's a setup here on one of the major plays or one of the major um, tickers inside of the XLF. We go to our ETF DB here. Let me show you real quick how you can do this and have it work in your favor. So let me remove this and go to ET. Let's go to that sector XLF, right? Boom. If you come out to ETFDB, and this is a free website, guys. So free website, ETFDB, go to holdings, right? See their top 10 holdings. We got ads everywhere, right? Are their top holdings, right? These are their top 15 holdings. We, I guess, keep like the top 11 or so, right? But essentially, there's a setup on most of these, or a few of these actually. Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley. and BlackRock. There's setups on a lot of these top 15 holdings, and when that happens, beautiful things tend to happen. This is where you get that data to put into your flex grid. So if you're looking at my flex grid here and like, well, how did we get these? Why did I pick these? Right? I'm just using somebody else's homework. Somebody else had already determined that in this basket of stocks, right, called an ETF, right, exchange traded fund, they put together a list of things that are be good in the financial sector. Well, when a lot of the major players in the financial sector are all going to be in the same setup, giving the same look in the same basket, they're all rowing in sync. You're going to get a lot of movement, so to speak, to the upside, and we're already kind of seeing that play out now. Actually, at the top, the XLF, XLC, and the XLK haven't pushed yet because the market isn't open. But I'm gonna tell you right now, they're probably up maybe 1, maybe even 2%, and in this case, and they'll probably up some more, a little bit more today. The only issue, though, if we go back, is let's go check the Forex Factory for data. So let me zoom in a little bit more here so you guys can see. But you do have coming up here today. I'm going to refresh this. Okay, you guys got to be mindful of today and tomorrow's catalyst news. We're going into this is for Wednesday. Yeah, we've got core CPI, right? That's already transpired. And we also tomorrow have unemployment claims. So unemployment claims, retail sales, core retail sales for tomorrow. But as it stands right now, after the Fed chairs meeting, today, I should say, because it's already 10 a.m. We're saying 10 a.m., right? The core CPI data is okay. Let's go look at it here now. So the main point is we don't really necessarily care about the data. We care about how the market reacts to the data. We've seen countless times where, let's say, for example, earnings is a really good example. Earnings went really well, right? Earnings went extremely well, and um the market still dropped. So it's one of those things that's it's unique, but you just kind of got to roll with those punches, right? It defies logic, as I like to say. So we'll kind of get out of here. We'll go this, yeah. We'll go back out to our standard setup. But yeah, we wanted to kind of bring those guys to the front of the classroom and kind of show you that they all have setups and they're all pushing. So our setup works pretty efficiently, right? If you see our alert, it already crossed well above that threshold and pushed. So ideally, the time to get XLF was yesterday. We didn't have a video yesterday. Probably we should have put an emergency video out. But as you can see, yeah, definitely on the firing side. Now, what you could do, right, if you don't want to chase, wait till it pulls back to a VWAP. It probably will pull back to VWAP, being this massive gap here, probably pull back to even resistance. You could just be patient, wait till it gets there, right? Also, the fear indicator, the VIX, is kind of selling off there. So that's really good. The fact that the VIX is selling off extremely well. So let's go look at a few setups. I do have them kind of pulled up here on the left, but let's go. We'll do this. I got some written out here. So as I told you guys, we do have a buy bias on AMD. We're just waiting for a potential push to the upside there to go ahead and start getting some shares at like 116 area. Remember, you make your money on the buy, not necessarily the sell. So in a very nice support area right here, AMD is not going anywhere, even though it doesn't have nearly the market cap that Nvidia does. AMD is going to be a player in the space for an extremely long time. If you look at any computer today, mostly they have AMD chips and Nvidia chips in them. So don't be fooled. Just because it's not Nvidia doesn't mean there's not real value there. But we also still have a plan, right? So just because we take a buy doesn't mean it's infinity and beyond, right? We have a good risk profile and we act according to our plan. We got PCG also on the menu. So PCG, looking for we're just kind of making a note here that in the like a massive sell off here, So you could do something like a reversion to the mean trade because it had failed, very similar to the way we did with UNH, where the reversion to the mean is going to be to like the 8 period moving average. Massive sell-offs, huge sell-off there. You could even potentially sell puts if that's your style, but essentially would be looking to buy some sort of call vertical, or be selling puts, some sort of bullish play there for PCG. Just watch out for that. It's well beyond the 3 ATR mark after the sell off, and it does tend to react around the 3 ATR mark as it stands right now. So if we get a potential play, don't bet the farm, just act accordingly and kind of do similar what we did for the UNH trade. We'll take a look at that, just kind of show you what we're talking about. Play went to 3 HCR, so we have a buy bias, right? The trend is clearly down, but it's a little extended, and there's opportunity there for to catch people that potentially went short a little on the late side and then cause kind of a short squeeze, so to speak. But really it's just a version to the mean, and the play worked out extremely well to the upside. It's actually still going up, believe it or not. If we look today, I think it's actually continuing to scream to the upside. We got out here. There's definitely some money on the table to the resistance, but we went on and took our profits. And, even that day kind of sold off. So there was some silver lining there. But who knows what the next day will hold. And it kept climbing. But we did extremely well, taking 88% off the table on the first sign of danger for that. I mean, if you could look at that and you get 88%, and would you be okay with getting 88% of your money? I think most people would say, yeah, that's okay. So PCG is in that cohort for sure. You also get you also have to be mindful that DJT from a fundamental standpoint is looking pretty good. It did fire to the upside, huge massive candle, and there is a catalyst. Really, it's just a catalyst play. It's not necessarily aligned with the system, but there's a catalyst there. You do have a squeeze, so there is an active setup, and it did fire. There was a nice pullbacks in the upper half, not the upper third. Ideally, we'd like it in the upper third. The catalyst, obviously, this being Trump Media, a Trump technology company, Trump getting in the office, that has a huge catalyst, right? Just the fact that Tesla, combination of Tesla earnings and Elon Musk being one of Trump's right hand dudes, uh, gives him a huge edge in the stock, right? Just by guilty of association. Why do I say that? Because this dude has an X factor. Elon has an X factor that we can't attain for. One time I remember, I'll never forget this. One time Elon put out a tweet, "Hey, my stock's overvalued," and people still bought it. So it just gives you a sense of, well, people really do believe in the Tesla and what they're able to do, and so we'll be watching out for setups on there as the moving average get a little tighter. Hopefully, we get a little pullback deeper to 364, but we're looking for some catalyst plays going into February. There's something to watch. Okay. We got XLE. We'll talk about XLE a little bit. If you're tracking XLE, we did take a position in XLE back here at the 8 to 5 break, very similar to the reversion to the mean trade, only it was one of our rotational plays. So you got 98.9 up here, and then you got 83.02 down here. Several tests, likes this zone. I was expecting unbalanced volume also was going positive. So we wanted to go ahead and take that trade if it crossed above this setup. It's still same stuff, guys. Following a system. You identify a trend, the trend's rotational, right? Then you have an outsized candle. There it is. This is your outsized candle here. And then you execute a trade on that. Once you execute that trade, we literally forgot about it, got exercised on it, and I sold. So it worked out pretty good in that case, but you do need to monitor what's going on here. And it has since kept pushing. So the rotation is still in play. We like to sell at the first sign of danger. Take your profits, good to go. Nice base hit. You don't have to overextend yourself at all. So XLE worked out really well, just so you guys are tracking. ORLY. Market's about to open here, just opened just now, but you've got this kind of in play. Now, it did peekaboo you there. Now, what I love peekaboos. We've got XLU, Wells Fargo. So let's go ahead and do this. I'm going to show you guys I mean, there's a lot that's firing here. So what we're going to do is we're going to go straight to the XLF, and I mean, look at all that. Implied volatility, mark above, mark above, mark above, mark above. So we're gonna have a lot to do today, essentially. Everything fired off in the morning, not too bad. So yeah, nice gap here, very very clean gap, well above all this area. It could be a gap and go. We're hoping that there is some pullback, and as you can see right now, there's already starting to be some pullback. So what we'll do is we'll go ahead and set our position up. You guys are gonna see this live, well, not live, but you'll see me set this up. So essentially, calls, puts, right? We want to get a at the money call. We're gonna get a few of them. I guess if it's gonna pull back, we can take the how much is the pullback here? You've got 49, 48.5, right? So essentially, pullback might be at 49 ish. 49.1. Yeah, let's just do like 49.1, maybe a pullback there. And we'll look to get into play. We'll wait to see some confirmation here. I'm looking on the 2 minute. What am I looking for? I'm looking for, obviously, you see the outside candle printing here in the morning. You're going to get a lot of that. Okay, so as it pulls back to VWAP, we want to go ahead and just execute that trade now. So we'll do it for 23 days out, and we'll go ahead and get a 50-20. So we'll buy the 50 and we'll sell the 20. We're buying the 50, selling the 20, essentially making a vertical. We'll get like 5 of them here, right? And then go ahead and execute that order. Yeah, that order is gonna cost, how much is it? Like 400. We'll do another one. Yeah, there we go. 6. We'll get 6 there. Yeah, so not too shabby there, 450-ish for that. And yeah, we'll go ahead and take that buy. So they did go through immediately, which is good. Got filled on that. And then so we'll put our green arrow here. Now, in an ideal world, right, you would want it to pull back to kind of the level. But for us, because we don't necessarily like looking at the charts all day, I went on and just put it there, and hope for the best, right? It's one of those things where I really don't necessarily, you could be a dick for a tick, or you could wait for it to get down resistance, or wait get down to VWAP. Just really, the point is, make a plan, stick to it. If it pulls back to VWAP, awesome. If it pulls all the way back to this level, okay, you can add or do whatever you want. But the reality is we ideally just want to focus on executing quality trades, and a quality trade is over a week. So you can fine tune optimization, but the quality trade actually happened, so to speak, yesterday, right? I told you guys that we weren't trading yesterday personally, but we want to make sure that you guys are tracking. I might put that out a little earlier next time. But there's also a squeeze in play too. So if that squeeze fires off to the upside, sweet. If we as we got in on the pullback, that's the reason why we put VWAP up there. It's a measurement by which we want to, I considered, like, if you can get the best fill at VWAP, that's perfect. So you guys kind of saw that, us going to execute with the plan. It could work out, might not work out. Let's go see how everything else is playing out. We'll go to Goldman Sachs first. Probably is doing something similar, right? Goldman fired, Bank of America fired. Yeah, when I mean fired, it actually hit the alerts, right? Pushed, slightly pulled back, and is pushing. So it's already at its VWAP, which is good. You've got Wells Fargo. Now, Wells Fargo is a little heavier, right? It did push back. Oh, never mind. Yeah, there's this VWAP. A little bit more volatile. You could tell by the bands. They're a little bit wider, even on the morning. So definitely some work for this guy on Wells Fargo. Ideally, you'd want to see it cross above that setup candle right there, but not looking too bad. But anything is possible, right? We're gonna go look at CACI here, see what's going on with it, and we'll continue with our setups. right now. So you got CACI. I'm watching CACI for some fam there. If you guys are seeing CACI, opportunity to buy, gave you guys a heads up about a couple weeks ago that CACI had pulled into a very, very nice buy zone, 3 ATR, looking pretty like a whole snack. You did see an outsized candle here, which good gave an early indication to go ahead and pull the trigger there, right? It's in a downtrend though, so just be mindful. What we don't want to do is actually I'll move this up a little bit. We do not want to see a we don't want to see a break below that candle right there. This candle at we don't want to see a break below the low of 426.79. That's what we don't want to see, right? If it breaks below that, then you act accordingly. But the reality is it's probably get this for a longer term play, not really worry about the fluctuations. You definitely have made your money on the buy if you even if you pull the trigger now. Ideally was 2 weeks ago, can't go back in time. So if you take that now, it's even a on the board as of right now. So let's say, for example, it breaks two highs off of this. I definitely would consider that extremely bullish due to the fact that it's pulled back so much. Definitely unbalanced volume is reacting off the 64 pair moving average and pushing with a setup candle to the upside off of 3 ATR. Reversion to the mean is already complete though. That's another thing too. This is why reversion to the mean is so powerful, that even if it goes up or down, like if you took that buy here, you've completed your reversion to the mean trade, right? And wow, that was insane. So in the little late print there, look at that late print. Do you guys see that? That was a late print for the morning open. Insane. That candle printed late. Oh wow. Okay. Well, I mean, it's already triggered. Shout out to it. So let's do this. How would we formulate if we wanted to formulate this trade as a trade? It might be peekabooing here, but ugh. See, this is where you get into dicey water because essentially it's reversion to the mean, but the reversion to the mean trade already took place, right? So I would do this, and this is what I would do. I would say if you take this buy, take it to the first sign of danger with a stop out of the low of the break of 426. That's it. It's about a 1.5 to 1 risk to reward ratio. And the squeeze is firing. It looks like it's firing to the upside there. Unbalanced volumes going to the upside. Massive sell off there. You do have to keep in mind earnings is coming up, and if their earnings is anything like it was previously, we could be into some hot water. But yeah, that was insane. The print high there, break of high there. Now it has since pulled back below the VWAP, so we'll see. We'll kind of track it to see what kind of happens. Let's see if we can get some insight here on the 2 minute and the 10 minute actually. So yeah, double green on the 10 minute, pulling back to the 10-minute moving averages there. Don't necessarily like to take moving average trades. I do in the past have done that, but not necessarily looking to take this. So we'll see if we can get an outsized candle print and crossover. We'll just have to be patient on that for CACI. We'll come back and check in with it. We'll give you guys the rest of the setups, right? We've got Wally Mart or Waste Management, excuse me. Waste Management here. Excuse me. Thank you. Probably on the board. Yep. So you see the setup candle a couple of days ago. It is rotational. So this is just an indication that, hey, there could be some buying presence there, but there's not really a lot of meat on the bone there. Ideally, you'd want to see a setup candle going into this rotational zone where it gets washed, and then you could potentially take it back to the upside. Kind of like something like this, right? Right here. You want to see something like that or something like this. As it comes down, it respects the zone, it puts you a setup candle there. You take the break, boom. That's like a nice, like 3 to 1 risk to reward ratio. Didn't really get that here. Didn't get a repeat. So I'm not able to take that for waste management. But, just so you're tracking, that's what we were watching for that. For those who like Bitcoin, let's go take a look at some Bitcoin there. Not too bad. Some bullish structure on Bitcoin, right? You're going to start seeing a little bit more bullish structure on these cryptos as a new administration comes into office. They've already said that they are extremely bullish on Bitcoin there. So shout out to it. COHR. So here is something that we'd like to see, right? A couple days ago, crossed above double green here, and it's has since been pushing to the upside over the last 2 days. This is kind of what you want to see. It got a little overextended to the downside. What do I mean by that? I'm gonna plot this out for you, but essentially, you see this, almost it's not perfect, but you do get some like resistance here. It's kind of not exactly the cleanest charts because you could draw that here, or you could even say, oh, well, the resistance is as far as down here because of this pivot. But I'm likely inclined. There's more touches up here than there are down there. We'll let that rest there then. We'll also put one at highs so you guys can kind of see what the deal is there. So we'll leave that there, a little peekaboo through the top there. But as see, we don't like to see when it breaks like that, breaks below and comes back. It is good to, if you understand the mechanics, that probably a lot of people put their stops here, and stops here. So if it's running stops and then it gaps above, that could be a factor too, right? Now we don't know if the market actually just runs stops, right? Yeah, we do, but is it trying to target your stops? Because it's really just targeting liquidity. So if you put a lot of orders here, the market is a order filling mechanism. It is trying to find value. So if whether it's trying to go to a location where it can complete a whole lot of transactions, if you put a lot of orders there, then that's exactly what it's going to do. I'm not saying don't put your stop there because you need to protect yourself, but essentially the mechanisms for the market are to do exactly what it said it was gonna do. Okay, cool. So we'll go ahead and we're gonna definitely get the buy here. But if you were gonna set this up for options, I'll go ahead and set this up for you guys. If you're gonna set this up for options on AMD, maybe buy bias, come in here. And let's say, for example, you want to go ahead and take this trade to the upside as well, AMD, right? You can get it for 30 days out, whatever. And you could say, okay, I want a 50-20. Um, So we got a 56 here. What is this? What's the spread? Dollar. Okay, that's not too crazy. We'll do that buy, and we'll go ahead and against it. The 20 is here, which is really, really good. We like that. That's what we like to see, right? So good 500 there for that. That's kind of what you would look for on the vertical. If you were selling puts, right? Ideally I would go to the 30 delta. I would sell off the 30 delta, and I would buy back a little cheaper. So you'd be selling the 30 delta and you'd be buying back a little cheaper. Essentially, if you're selling puts, it's still a bullish play. Like if you're buying puts, it's a bearish play. If you're selling puts, it's a bullish play, and you're looking to collect premium. So we could potentially leverage in both. Let's go ahead and shoot that. Boom. To kind of showcase that, maybe it'll get filled. And then if we're selling, because it's already kind of gone down there, we're going to go ahead and sell the 30 delta right here, right? And maybe we can collect some premium, and then we'll buy back on the 10. Cool. So it should be a vertical going the other way. Should be a credit here. I think I might buy an effect. Let's see if it works. Might not work there. Okay, cool. Might work, might not. We'll see. So we're looking to get filled on both of these guys. So this is how you would do it if you're looking to essentially say, okay, I want to buy one to the upside for reversion to the mean, but then also I'll sell one to collect premium because it might, once it starts reverting to the mean, what's the likelihood that it will like break to the low here? I'm estimating it's kind of you know, a low probability that it'll do that. And if it does kind of get back down here, essentially you just roll it down and out, right? You just roll it for more time and then roll it out for more. You roll it down for more time, or roll it down for more space and roll it out for more time, collecting more premium. You can roll it if you need to. It's a little bit more advanced strategy, but you kind of got to see us execute that. If it even executes, it might not, Phil. So Either way, it's out there in the ether. What else we got? We've got ASML. So you got ASML here, very similar by bias. For ASML though, we're gonna wait for a trend change. Ideally, you'd want to see that by bias uh, kind of crack above here. Didn't take advantage of that first initial one because we saw the day before that kind of jump out there. So seeing this, I was a little too hesitant to kind of pull the trigger there, but has since we're looking for new plan, looking for the trend change on that for ASML. We want to get the ASML, and then I think we let's talk about SoFi. SoFi. So yeah, SoFi, I put the levels there. These green arrows. If you guys know on my charts, the green arrows indicate a play. Individual got a play, so shout out to him for taking this play. Unfortunately, it did get stopped out. It is back up to the entry area, so kind of a peekaboo stop out there. It is what it is, though. Squeeze ended up firing to the downside, so there's a little bit too much juice, a little bit too much momentum to the downside. The setup was there. You get a nice uptrend here with a pullback, and then it reacted off and respected that level. Just too much strength to the downside to carry it through. So there's not really much you can do about that. It does happen again. Not all systems are perfect. But ideally, this is kind of what you want to see for stuff like rotation. Goes up, comes down, respects that level. It just peekabooed and stopped us out there. Didn't have any follow through to the upside. It's not always perfect, but we losses are lessons. This is something that we can definitely take a peek at. I am going to do a series of the losses. I am going to do a series on all the losses that we've taken over the last year. I'm essentially building out a journal for the last year, and I want to showcase all of my losses. So many people showcase all their wins and put in the chat all their wins. What we're going to do at this channel is complete transparency. If losses are lessons, this is like the best way to get lessons is to go over your losses and drill them down with a hammer. I'll probably be the only show to ever do that and say, we're just going to have an entire show dedicated to all of my losses for complete transparency and all of my losses for lessons. Really, it's for the learning. You want to get the knowledge and the wisdom and understanding. So we want to get the losses built out there so that we can kind of see um, all the good stuff on the flip side. Actually, let's do this. Do we have? So we've got some more setups. We're going to take a look at those here in a second. I do want to, we'll cue you in on SPY, see how SPY is doing. Here, yep, nice push in SPY there. I also have OKE. Let's go take a look at him. Nice push, OKE. Very, very nice. We did take a traditional setup. No setup, like this is what I was talking about on the moving average setup, right? If you've got a very nice push, unbalanced volume green, double green, right? Moving average cloud looking pretty good. Oh, battery's running low. That is not good. That's not good at all. Can you guys see that? We'll remedy that really quick. I don't know why I didn't plug it in. Here we go. Hang on. Nice. Crisis averted, right? But if you notice that on the weekly chart, right? On the weekly chart, you have moving average cross green, right? So it kind of came down, it compressed very nicely, respected this rotational zone. There's two confluences right there. You got an uptrend respecting this rotational zone as it should. And then you get a buy above the 8 period moving average and the previous week's high. So there it is. Buy above the previous moving average and above the week's high. You also see here on the squeeze that the momentum is kind of shifting blue. That's not necessarily what we take to make a trade. It is just using the system. What's your stop? Essentially, you're still a 2 bar professional, right? On the day, you got 1, 2. Right there is your stop, right? Which happens to be on this tight weekly candle, so it worked out really, really well. But for the last 2 days, it's been pushing to the upside, right? We also have playing the XLU. I think it might be close to stopping out if it hasn't already. Yeah, there it is. So we're gonna go ahead and let them go. The market is pushing pretty considerably. So we'll go ahead and go over here. This is a loss. For sure, as you can see, it's down 93%. So it's all or nothing essentially. We're gonna go ahead and exit, create a close. we're just gonna let it go because hey, this is it's losses or lessons. Sometimes the market reverses, and you have a set of. But we'll see if it gets filled sometime today. Is it? Is it here? I thought I had way more time than that. Than like 2 days. That's very interesting. Yeah. But anyways, so we've got the order out there anyway for because we pulled it on the monitor tab. But yeah, so we'll go ahead and exit that position. It probably should have exited at the open. There was a lot going on there, and I wanted to get you guys what you needed beforehand. But yeah, the market is definitely in squeeze mode, looking to fire off to the upside, probably. So want to get out of the way of that freight train for sure. We're not going to do anything crazy like reverse our position or revenge trade it. That's not what we do here. If you guys want to do that, I would do that somewhere else. But here you've got unbalanced volumes green, still had a nice pullback, respected that level that actually pushed the first day. So it would have been decent for a day trade, but for a swing trade, it's just respecting this level, bouncing off of it, and didn't take a lot to break that resistance and find new support as well. So just keep that in mind. We'll let go of that. So KVM 3ATR. Let's go look at KVM here. So we put a new scanner up. We wanted to see when things get a little extended to the upside or to the downside. In extreme cases, when it start getting to 3 ATR, might be a good idea to sell at extreme highs there. So sell at extreme highs and maybe collect some premium to the downside as it reverts to the mean multiple weeks. You get 1, 2, 3, 4 weeks of pushing, essentially 3 weeks of pushing, one stagnant, and another week of pushing. So it's in a kind of a new position now. Was there an opportunity to take this for a buy? You did get an indication here that there was some potential buyers stepping in, and you could definitely have taken that, right? It was still would have been valid according to our old system. It would have been valid. Cross above previous week's high and above 8 period moving average. You can go ahead and take that to re relative highs, and there was confirmation here as well. So not too bad, not too bad at all. Also, it respected this pivot. So yes, there's that. So boom and boom. Right. We'll mark that out. But yeah, essentially, very very nice push there, out there for KVM at 3 ATR. So we're gonna be monitoring stuff like that pretty closely. The reason why you see most of our scanners are blank is because we want the best of the best. We want extreme circumstances to get outsized winners. So 3 ATRs for reversion to the mean trades is really good, and then you can get outsized volume getting washed really good, right? When a lot of people step in the market and then they're off sides, what are they going to do? They're gonna fuel by market structure. They're going to fuel your trade, right? So if you take a buy and to get out of that buy trade, what do you have to do? You have to sell. If I'm on the sell side, you're fueling my trade as a position goes against you. So that's kind of we want to be on that. Want to think 2 steps ahead, so to speak. We also have, last but not least, let's go to IWN. Let's go look at our canary in the coal mine. So canary in the coal mine, kind of approaching that level that I was telling you guys. This resistance zone has been a real stickler for the IWN. We still want to see it break this resistance at 226.62. We want to see it break that level really, really bad. So if it can break that level, I would say, hey, all systems go. I know we've been kind of doom and gloom on this channel as regards to the market, but this has been our canary in the coal mine. If the IWM can make moves to the upside above that zone, fine. I would say, from me to you, I would say that hey, I believe from an educational standpoint that we could see the support be respected and a potential rally into resistance. You know, we this isn't a channel where we give financial advice, but we do like to basically use the education of what has worked in the past, right? Your Darvis levels, your support and resistance, that is critical. That is key, right? So as the VIX sells off essentially from 17 to 1676, fear is starting to subside in the market. Didn't quite get up to 20. Right. When we go look at VIX, right, when you start getting to the 20 to 24 territory is when you're like, oh, okay, this might be a good potential to make some positions to the downside. It has kind of since sold off, but it got as high as the 22. So very, very nice. Like when you look at, we put our alert here at 2301, didn't quite get up there for the VIX before it started selling off. So it is what it is. Didn't necessarily get that, but had it peekabooed up there would have been a very nice play, right? Kind of peekabooed up there, boop, dropped off, peekabooed up there, boop, dropped off. So you can trade the VIX as well, the volatility of the market, but essentially didn't quite get up to our alert for us to execute that. Would have been pretty nice, huh? All right. Well, guys, I really appreciate you. You guys have been awesome. Thank you guys for tapping in with MC Fire and looking at the trading system, guys. 2025, I would definitely say you guys got to be on go mode, right? There's a couple things that are going to be taking place that are going to be some catalysts, right? Number one, new, uh, new, basically, we're getting a shift inside of the in our political system, right? New people coming in, old people going out. So if new people are coming in and they're pro market, pro cutting taxes, pro cutting rates, right? If that starts to happen, that could be a huge boom in the market. Now, what that does do is it causes inflation. But if you're the one holding the assets, inflation isn't necessarily a bad thing, right? The cost of things going up. If you notice, most companies are recording record profits in around a period of high inflation. So, which side of the equation do you want to be on, right? Wealth is not destroyed; it's merely transferred. So, if wealth is transferred, if prices are higher and you're feeling the outflow, where's the inflow going, right? Think about, you just want to be on the right side of the equal sign. Okay. If that's the case, then I would definitely say I would be biased, a bullish on most assets classes, Qs, SPY, unless there's something drastic that happens, let's say like a global conflict or something like that, then I would definitely be extremely bullish on most asset classes for sure. So, guys, this is MC Fire. Thank you for tapping in with us. You have a good day. Goodbye. Peace.